This episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. What's going on? Good evening to everybody. Nope, I'm not sharing the right screen. Let me share the right screen. I'm sharing the screen I typically share, but now I need to share that screen because I have the camera off. So I was not sharing the right screen. How's everybody doing today? Hopefully y'all doing fine. Hopefully everyone is doing fine. What's going on? Here learning share, Kim, Valentine, Michelle. What's going on with y'all? Gonna do a quick weekend chart prep. Nothing too fancy. Just a quick weekend chart prep. I can see the market already opened up for the day. Got a small little new week opening gap there. Go ahead and throw that on there since we're on the daily chart here. So Tim, why did you put those lines there? Well, I put those lines there so I can see the prices. And since it's in view, I don't need those lines. A lot of times the gap or whatever I'm getting ready to copy be like well out of view. And then I'll be having to type the information in. But that one was within view. So we're going to put on our new week opening gap. For anyone that might be tuning in that don't know what a new week opening gap is, the new week opening gap is the difference in price from Friday's close to Sunday's open. Right, that's Friday's close at the end of the futures trading day, not the New York trading time. The Friday close of the futures trading day to the Sunday open of the futures trading day. That gives us our new week opening gap. The new day opening gap is the same thing, except for it's just from data like Monday to Tuesday, Tuesday to Wednesday. Right? It's the exact same thing. The closing of the futures trading day to the open of the futures trading day. All right. Got a bullish new week opening gap. There's a little hopping spot on my wall. See if I can get him without him jumping 500 miles. Got him.
Tim, where is your picture?
What, my picture?
Yeah.
You talk about the video?
No, I'm talking about your face.
Oh, I ain't got my camera on.
Why not?
None ya? Touch your nose and
He
say
said
Z.
none, yeah. He said none, yeah.
Touch your nose and say Z. Probably because I'm just sitting around in my tank top, you know. Don't feel like turning the camera on. Not that I got to explain anything to you.
Whatever.
Oh, where your picture? What? It sound like old country cricket. Where your picture? I'm like, what picture you talking
I am
about?
a country cricket, so shut up.
Where your picture? My picture. Okay. For those who don't know, that's light skinned Deborah. Every time light skinned Deborah show up, we have issues. Right? We have issues whenever light skinned Deborah show up. Now, like I was saying, we got a bullish new week opening gap this week of come here about 7.25 points. Very small little new week opening gap. Nothing to write home to mom about. Prices still continuing on. I see here right there at the close of the day how we dipped down into that sell side there, and we moved up, took out that buy side, got our little range there. We've come back down, right? So price is just continuing doing what it likes to do. Let's go up to our weekly chart here. Not going to spend a whole lot of time today. I'm just going to do a quick chart prep and then go eat me some wings and watch Teen Wolf. I started binge watching it's an old show called Teen Wolf. They got like 6 seasons. They kept putting it on my Netflix things, based off things that you've liked. We think you enjoyed this. It just kept showing up. And when I was growing up, I liked that movie Teen Wolf with Michael J. Fox. And then they even had a cartoon, Teen Wolf cartoon. Michael J. Fox was like the main character that was supposed to have been based off of, I guess, from the movie. I was like, hey, I enjoyed Teen Wolf growing up as a youngster. Let me look at this Teen Wolf. My son came out and was like, Dad, were you watching Teen Wolf? I said, yeah. That just seems not like something that a grown man would be watching. Like, why not? Had a show called Teen Wolf when I was growing up. Why? That just look like something that like Kiara will watch. That's like my niece. Well, she grown now. Man, I can't believe my niece is a whole 7th grade school. I cannot believe there are children like entrusted into her care, and they look at her and be like, hey, Miss Carson, can you help me with this? Wow. Man, I tell you, boy. That's our weekly high and low from last week that we just annotated in the midst of me realizing how ancient I'm getting. It's our weekly high and low. I just annotated. If you wanted to tell, why do you always go all the way down to the 1 minute timeline? Because that's just something with me. I just like for my highs and lows to be anchored to the highest and lowest candle on every time frame I go through. So I mark it and I go all the way down to the 1 minute and make sure it's anchored on the exact candle it's supposed to be anchored on. Looking at our weekly chart, so far, the Santa rally has been in effect. We looked at that, compared it to last year. We looked back and said, hey, well, first of all, we looked it up to get our official, what's the official Santa Claus rally. I don't like to go off of what I think. I was like, hey, I believe it's like the end of December into the beginning of January. So went out there and used Gemini, said, hey, what's the Santa Claus rally days? and it said the last 5 trading days of December through the first 2 trading days of January. And we said, hey, these are the days that the Santa Claus rally typically happen. And thus far, the rally has been happening, right? Will it continue? Raggy. But it has been happening thus far on the weekly time frame, right? Based off of our current range that we're in, we are in a premium. We are still in the buy program, right? Looking at the weekly chart, it's clear that price is in a buy program, right? We've come down, taken out liquidity. Fancy Dancy is on, right? We dropped down, swept liquidity here, right? This is, if we look at, right, it came up, down, came up, start consolidating here, all right? So looking at this area from this consolidation up to there, right? Because we left a balanced price range, consolidated here, then move, not showing a desire to go there. Now we have a balanced price range here, right? So if we go from there to there, right? We came down, took out the internal liquidity, came down into the lowest imbalance, the lowest weekly imbalance inside of this range. Now we're going back up, right? So the buy program is still intact, right? Manipulated out the sell side. Now we're moving up, moved up here. Then we dropped back down once again, right? Came back to roughly the middle of the range, right? And now we're moving back up again on the weekly chart. So price is continuing, manipulate, right? Continue to move, looking for the continuation move. All right. Nothing else I want to mark out on the weekly time frame. If you would like to keep an eye on it, right? We have a suspension block right here that we're at the higher end of on the weekly time frame, right? So we got a weekly suspension block there that we're on the higher end of. Okay. We've moved back above it. And once you move back up, like we moved back above it here. Let me get we moved back above it here, right? Got a closure back above that. So now we come down like this and get below it. If we're bearish, I want to see it act as a bearish gap. But we came back up. We did not defend the upper half, right? Came back up and closed back above it. Now that we've closed back above it, right? We've started to defend the lower half. We dropped down, got a closure in below there, right? But we had a reason to come down. Got an order block down here, right? Got a reason to come down there. Come down into the order block, respect the order block, then we come back up and close above the lower half. So we're defending the lower half right now. It's that the next week we move up, close very close to the high. We poked above, close very close to the high. So now on the weekly basis, if you want to watch it, this suspension block for the week of October 20th, right? You want to see the lower half be defended, all right? And if you put it into the 4th grade, right? You put it into the 4th grade, it's more bullish if we stay above the upper quadrant there. All right. Remember what Michael teaches. Your best longs, right, are going to be found in the premium of old bullish, old bearish, bullish PDub type bearish. Once we get above them, your best longs are going to be found here in this upper quadrant here, especially the upper half, especially the upper quadrant. And if you're bearish, looking at old PD rays, your best shorts are going to come in the lower half, especially the lower quadrant. All right. So now that we're back up here, want to see us defend this and ideal to stay here and above. All right. All right. I'm not going to keep that on my chart, so I'm going to remove it. Go down to the daily. All right. Looking at our daily chart. On our daily chart, we're back above that SIBI over here from November 13th. All right. Not quite above. We're above the fair value gap itself, but the entire imbalance, we're not quite back above that yet. Looking at that right there, right? So just the imbalance itself, we have closed back above it, but the entire inefficiency, we haven't closed back above the entire inefficiency. Okay. So again, same thing with the weekly, right? You want to see that lower half defended, especially on the daily, because it's a balanced price range also, right? So you're looking for that to be defended. All of the PD arrays that we were watching, right, when we mapped out our previous 20-day look back, right, we said we want to see price get back above this bullish order block and use it as support. We've gotten back above that bullish order block. We talked about this. Oh, you know what? That might have been on the Q&A. Was that on the Q&A? I think that was on the Q&A. We talked about that. That wasn't on a live stream. I'm sorry, y'all. But looking 20 days back, we talk about the PD arrays you want to point out that you want to look at. Why am I picking these PD arrays, right? Based off the 20-day look back, we're saying, hey, there's an order block there. Since when a buy program want to see price get back above it and use it as support, right? Then if you look here, Monday, we traded up, poked above it, right? Closed inside of it. Tuesday, we swept liquidity, then traded up, closed above it. Wednesday, we kept going up. Wednesday we kept going up. And then Friday, we wicked above that high, right? And closed back inside the range. But we've gotten back above it and using it as support. Just as outline was looking at this is Friday right there. So it would have been Saturday. We would have been doing the Q&A or whatever it was. If we go back 20 days, right? 20 days back. Yes. So 20 days back, this right here was, I have to come there. There. It was our lowest low. And that's our highest high there. All right. And so lowest low, highest high. Now that's our highest high and lowest low. That's why mine is over here. But at the time we was talking about this, right? This was our 20-day look back, right? And looking inside of our 20-day look back, we were down here. And we said for the bullish idea, since we've come down into a discount and we're moving off, right? Want to see price get above this, continue up right there. And I said you can watch that wick, right? Those are the PD arrays that we picked out based off of this 20-day look back. And now here we are, we're above that. And then the wick there, right? What do we say we want to see it do? Who remember what we said we wanted to do with this wick right here? We want to see price do what? Who remember? Who remember? Don't pretend like you wasn't there. Who remember what I said? Who remember what I said? Y'all better say something.
We want price to get above it and use it as support.
That's what we said about this. And then we said with the wick, we want to see price do what?
There you go. Use it.
No. We said we want to see price get above this and use that as support. And then with this wick, we said we want to see price do what?
If it was bullish, you want to see price get above 50% of that wick and keep stair stepping up.
That's it. Stair step up the wick until we go up. All right. And we really want to see a stair step up any PD array. But since we were below both of these, right? This is the place where we want to come reclaim an order block. We want to get back up here and reclaim this bullish order block, right? And once we reclaim this bullish order block, right, that's when we're using this, right, this imbalance, and we want to see it stair step up these quadrants like that right there. Okay, because inside of this wick, right, wicks and fair value gaps, I look at them, I treat them sort of like the dealing ranges, right? That's how I treat the dealing ranges, where you have this huge dealing range, and what guides you inside that dealing range? What's our roadmap? Huh? What is our roadmap? It's a magical thing we bought off Amazon called a what?
A
Huh?
Fibonacci's.
A Fibonacci tool, right? So since we just got this big imbalance here, this Fibonacci tool is our roadmap, right? So once we start trading up into this wick, we're looking for key things to happen. What key things we look for? We want to see a stair step up this right here, right? This is our roadmap. This is giving us insight while it's inside this wick of what it wants to do. Just like when we're inside of our dealing range, right? That Fibonacci tool is giving us insight to what price wants to do. Okay. And, you can continue to watch this wick because we're still inside of it. We've come here inside there. Then now our 20-day look back is here. If you're just starting right now, right? If you're just starting right now today, you say, okay, this is my 20-day look back here right now today. We come over here and we go back 20 days. Okay, we go back 20 days now. That's our new 20-day. Okay, so all right, that's our highest high, our lowest low, right? And then it started once this low was created right there. So now we're looking at trading opportunities, right, at these quadrant levels after this day right here. All right, so now this is the new 20-day look back right there. And inside our 20-day look back, right, we have a suspension block over here, right? We got a bullish suspension block there that we've already traded down into and you came up off of. So now, right, you're looking for that continued bullishness, right? Because even though we just started watching it today, I'm just saying that, but if you just start watching it today, you're looking to see what has price done, right? And so inside our 20-day look back, right, we can see that price has came back up here, right, and created an inversion fair value gap over here, right? We have we poked back above this bullish order block. We traded down into the suspension block that we created right here, came back up, closed above the order block, right? Traded back down. Looked like we might have traded down into the wick of the order block. Yep, we did. Came down and kissed the wick of the order block. And we moved up. Then we moved up, fell just short of the upper quadrant of the wick here, right? So that wick, that order block, that fair value gap there, right? Those are key PD arrays inside of our current 20-day look back right there. And this one has already been used for institutional order flow entry drill, right? So we've already come there and went up. And so for low resistance liquidity run, right, we don't want to see this revisited, right? We want that low to stay intact for the purpose of low resistance liquidity runs, that weekly low right there. Why is that? Right? Because we've come down, went up, traded down, went up, and we haven't taken out any liquidity yet. Right? So since we dropped down into this imbalance, right, start to move up, and we haven't swept a high yet, right, pulling back down into the sell side is not a low resistance liquidity run. Right? Yes, we can come sweep that and continue to go up, but that's not low resistance. Right? That's more of a high resistance because we went up, came down, went up, and then to come back down and sweep that liquidity to go up again. That's not low resistance. Okay. Okay. All right. So those are the key PD arrays on a daily time frame, right? That you could be watching based off of our current 20-day look back. What is this right here? Oh, that's my wick. I had, and this is the volume imbalance that I was watching as a drawn liquidity. We didn't get there last week, right? That daily volume imbalance, right? And as you can see, I was watching the wick there, still had it marked out, right? And then I typically don't mark order blocks. I just keep an idea of where they are, right? So there it is. He actually walks it like he talks it. The stuff was still on the chart. This is a daily, daily, put my daily high, daily low. So our daily high and weekly high are the same. That's our daily low. Turn off this 20-day look back. And for the daily time frame, that volume imbalance, looking to see if price still shows desire to draw up to that. And there is a daily volume imbalance down here, right? If price want to get heavy and take out this daily low, I would want to see this daily volume imbalance right here stand firm. That's a volume imbalance and should be a new day opening gap also for the 24th, December 24th. Yes, right there. So that December 20th, if price got heavy and came down to sweep Friday's low, right? I think that'd be healthy price action. Why do you say that, Tim? Because we took out buy side there, right? So we swept buy side, traded down. So healthy price action would be to sweep sell side and continue up, right? What would that give us? Buy side, sell side, back up. That'll give us a wig snatcher. Okay. And the algorithm uses rocket. I'm use liquidity as rocket fuel. Fill up the tank, 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 fill up the tank. You know what I'm saying? You want to keep sweeping like internal lows. Okay. But like we said here, we don't want this to get taken out there because this right here is on the weekly basis and we haven't gone back up. And, you know, we came up, traded down, right? Came up. It is fine to come here to take liquidity, right? And then we trade up, right? Just say we take this high right there. Then it'll be okay to come back and take a weekly low here and continue up. You see what I'm saying? Like that. That's what I mean by that. Oh, yeah, like that. All right. That's on the daily. Go here. So the same as the weekly here. Negative 166. All right. What's up? What you about to do?
Nothing about to do voice note and delivery.
You say you doing the voice note. Yeah, so I had that. Just keep that in mind. That's that daily new day opening gap. Price got heavy. Looking for it to firm up down there on the area there. Bear in mind, we do have some internal liquidity there that can be taken if price got really heavy, right? But I prefer to see it take out the daily low, firm up at the new day opening gap and that hourly order block right there, firm up there and continue the bullishness, right? And why am I looking at it like that? Because over here, this is our last area of accumulation, right? This is our first area of a distribution. Now we're straight across from it. This is our last area of accumulation. And over here, what do we get over here? Our original silver bullet. So we want to see a low resistance run into the buy side now, right? Once we get over here at this last stage of accumulation, right? In the market maker buy model, we're looking for this to be a low resistance liquidity run. We don't want to see those deep retracements here anymore. All right. Yeah, remember, it can do what it want to do, but based off of, you know, the idea of low resistance at this last stage of accumulation, you're looking for that low resistance liquidity run into the buy side, and that's that daily volume imbalance that was watching last week to see if we draw into it. We drew towards it, but we didn't make it into it, right? That's pretty much it, man. That's it. Keep it simple. Keep it simple. Nothing to try to overcomplicate anything. Looking at our monthly time frame, that's our monthly high there. That's our monthly low all the way down there. Still showing bullishness, right? Respecting our monthly wick. What in the world did I just? Oh, respecting our monthly wick. We talked about there when we first started out the month, right? Drop down just below consequent encroachment of the wick. Getting nice discount sensitivity there. Right? So that still looks good for a higher time frame buy program, right? We got relative equal highs here at the completion of this market maker buy model, right? Relative equal highs sitting there at the completion of the market maker buy model. All right, looking for that low resistance liquidity run into that. That'll bring us back into this daily SIBI, right? That daily SIBI is the first SIBI that was created when we came down and took out liquidity. So after completing this market maker buy model, we want to see price push through this and then use that as an inversion to continue up into all-time new highs. What new all-time highs, right? So you would look for price to push through this and then use it as an inversion. Why do you want to see it used as an inversion? One, we're in a buy program. Two, it's the first SIBI that was created before coming down, sweeping liquidity, and then coming back up once we offer that price right there, right? That gives us a change in the state delivery based off of that bullish order block here. That'll be a bullish order block. That'll be a change in state delivery, right? And then that's the first one before taking liquidity, then getting that change in the state delivery. Then you want to see it be used as a inversion fair value gap to complete the market maker buy program, right? I always want to understand, why do I want price to create this PD array? Why do I want price to do this? Why do I want price to do that? And then when we look there, We have that SIBI in line with that quadrant. So it would be nice to see it create some type of bullish PD array right here at that quadrant, because looking forward from this point here that way, right, you want to see a bullish PD array created here, where we look back and see confluence of a supporting PD array in the form of that inversion fair value gap if we get above it, and then this reclaimed fair value gap if we get back above it, right? Always use your roadmap to identify points where high probability trades should set up. And then, because like this suspension block there, where was it created? Right there on that quadrant level. When we look back, what do we see? We see a reclaimed fair value gap at that quadrant level. We see a reclaimed order block at that quadrant level, right? A lot going on. Okay, always use your roadmap to let you know where are the high probability trades going to peak out their little witty bitty head. That's all I got, man. Anybody got anything for me? Nothing. Okay. Hey, tomorrow is Monday. I think Thursday is a holiday. Forex Factory, 29th through the 2nd. Yeah, so we got Thursday is the bank holiday, January 1st. So we got Monday, Tuesday, Wednesday, regular trading days, and then Friday, right? So Friday is the first trading day. These are the last 3 trading days of December. So Monday, Tuesday, Wednesday. So last week, Tuesday, Friday, right? Tuesday started the I'm using air quotes, Santa Claus rally time. They said the last 5 trading days. So the 23rd this year was the 23rd, the 26th, 29th, 30th, and 31st. That's the last 5 trading days of December. And then the 2nd and the 5th will be the first 2 trading days of January. That's the time frame where you're looking for your Santa Claus rally to play out over that 2 weeks in a day, like calendar time, right? These 5 days here, you had 3 trading days. These 5 days here, you'll have 4 trading days, and then that Monday. All right.
Hey, Tim.
Yes.
Hey, so remind me again why in the areas that you just kind of identified where we want to see a bullish PD array, et cetera, since that is in the premium of the range, remind me again why the fact that it's in the premium of that range shouldn't matter. Is it because what's to the left has already been efficiently delivered and those are balanced price ranges?
I talked about it at the beginning of the stream. If you want to hear, just go back and look at it.
I got you.
It's something that Micah has taught many times. So when you're looking for, and the short of it is, when you're looking for low resistance liquidity moves, the best longs are going to be in the upper half of old PD arrays, and the best shorts are going to be in the lower half of old PD arrays. We talked about this in the past about, that sounds counterproductive because you're saying selling the discount or buying a premium. You're not buying at a discount or selling. You're not buying a premium or selling in a discount. You're selling at resistance, right? You're moving up to a premium of your dealing range that you're in, and you're selling at a resistance point. What is that resistance point? That old PD array that you're trading up into, right? So, but that's what it is. You don't want to get caught up in looking. You don't want to be staring. You don't want to miss the forest from staring at the trees. You know what I'm saying? You want to understand exactly what's going on with price. You want to understand the importance of order flow and price delivery, and then understanding what time frame is holding the microphone right now. Right. If we're if we're um bullish on a weekly time frame and we've already traded down to a discount, stop trying to force it back down to a discount on that weekly time frame. If we're bearish on a daily time frame and we've already moved back to a premium on a daily time frame, stop trying to force it back to a premium of that daily time frame while you down on an hourly chart. Right. So just understand where price is in the scheme of order flow and price delivery.
Okay. All right.
Yeah. And just like everything else I tell, I just keep it a buck with everybody. It ain't no one size fit all answer for anything. Everything depends on order flow and price delivery. Where are we in the sense of order flow and price delivery? Right. And if you're a person who just got that ad just like I did when I was talking, just back it up. I ain't saying nothing super important. Anybody got anything else? All right, man. Tomorrow, Monday, diamond members, we gonna do can't even think, pre-market analysis. Yeah, we're gonna do pre-market analysis tomorrow with the diamond members. Everybody else, if I somebody got an appointment, hold on. If I ain't got nothing going on like Tuesday, because I'm most definitely gonna be up. I might pop on and do a pre-market analysis with everybody on Tuesday, just depending on if light skinned Deborah get on my nerve or not. I don't know.
On which way? Like good get on your nerve or bad get on your nerve? So I know how to handle myself.
My nerves are wishy-washy, so I don't know. I can't even hold you. I don't know.
Oh, I have person.
Man, what's today? The 28th. All right, I got an appointment up. No, I got an appointment tomorrow morning, so we're not gonna do no pre-market analysis in the morning because I got an appointment in the morning, and then I got an appointment on Wednesday. I got to do labs in the morning, and then I got my annual visit on Wednesday. So, what I'll do I'll do a tape reading with everybody on Tuesday. That's what we're gonna do.
Yay!
I'm gonna do a tape reading with everybody on Tuesday, and then Wednesday is I got an appointment. If my appointment go like quick and I get back early, I might pop in and go over the charts or something with the diamond members, but we're gonna do the actual tape reading on Tuesday, and I'm gonna invite everybody in for that. And then the market closed on Thursday, and then I'll do another tape reading with the diamond members, and on Friday, because last week we didn't get a tape reading last week because the market was closed, and then because of my schedule I got to shift stuff around, so we'll do 2 tape reads this week. Tuesday, one with everybody, and Friday, one with the diamond members. Hope everybody enjoyed their Christmas. My cash app was real quiet. I ain't get no cash apps from nobody. I ain't feel no love from nobody. All my cash app was just going out. It was an outbound only. outbound on. I ain't getting no love. I did get, you know, some nice gifts, the regular dad gifts, sweatshirts, um, little tools that I like. I got a walk pad to put at my desk here. When I be here watching charts, I can take my walk pad from under the bed and walk on my little walk pad. Got that. But other than that, just spent a whole lot of money for Christmas. My wife told me one day last week, told some thank you for letting me just go crazy this Christmas. I really had a good time shopping. And my youngest son, she got him everything on his wish list. She was like, he don't ask for nothing, so I'm getting him everything that's on his list, and he got everything on his list. And but that's what they call being a parent, I guess. Hey man, y'all got the schedule for the week. That's what we're gonna do. Got to go get blood tomorrow. Then Wednesday, my doctor gonna tell me that I need to lose weight, like she always do every year. I say, look here, man, I'm in my 50s. I ain't gonna be skinny no more. So that you wanting me to get back down to 225, that ain't gonna happen. I go to the gym every day. You know what I'm saying? I'm just right here. This where I'm at. Like
Where you at? Where you at?
260.
Oh,
I'm stuck at 260. I've been at 260 for the last 9 months.
man, you got to be 240 to do activities like horse riding and helicopter. They gonna say you way too much, buddy.
Hey, I ain't gonna be doing that. If he hit me, I'm gonna get one of them waivers that you got, because I know you busting 240 in the head.
Nah, man, I'm a good 220.
A lie don't care who tell it. A lie don't care who tell it.
Well, man, I hear you crying by Christmas, man. Look at all the smiles on your family face. They go your gifts right there.
Okay. It sound good when you say it. Sound good when you say it.
A little gift will feel a little better, huh?
Man. I still be checking the cash app to see if anything delayed. I'm like, delayed cash apps. And then you wasn't on the call today when mom, I said, hey man, my cash app still a little dry, man. I'm trying to bounce back from Christmas. Guess what your mama gonna
What'd
say?
she say?
The market don't open until Monday, don't it?
She let you know that's when you get back on
Man,
Monday.
you don't get off my phone.
Funny.
You don't get off my phone.
The market open on Monday, baby. You'll get back.
You don't get off my phone. I'm talking about donations.
And stick to the rules. No trading in your feelings.
You feel me?
Chasing. No chasing.
You know what I'm saying? I got rules when I go to work. I'm talking about just the, you know what I'm saying? Can I get a little philanthropy in my direction?
I can dig it, man.
Man. All right, man. Appreciate y'all for hanging out with me. Remember, understand why you putting stuff on your chart. Don't just put stuff on your chart because you say, oh, I see this. Oh, I see that. Understand why you putting it there. You know, and we got a roadmap. Use the roadmap, right? If time and price don't align, don't force it, right? Like I always say, if based off of your time frames that you watch, if your structure time frame has not interacted with a PD array that you have designated as an anticipatory reactionary points, why are you on your entry time frame? You shouldn't even be there. You're there because you're trying to force it. Patience, grasshopper. Patience. With that, man, till the next time I decide to get on Algo's internet and share my thoughts on this thing that they call price action. It's your boy Tim Lee Rogers Sr., aka Aranya Grande, That just mean big spot. If you don't upload Espanol, y'all be safe out here in these trading streets, man. Gone.